Good morning. Thank you for tuning in to another pre-market pulse scan. This pre-market pulse scan is for trading on Thursday, January the 26th, 2017. The time now is 8:33 a.m. Eastern Standard Time. And for the most part, having some technical difficulties, so we're going to work through this as we're doing this live. All right, first things first, while I'm booting everything back up here, let's talk about what has happened in the overnight markets and pre-market. For the most part, gold has slid back. It slid back down below 1,200, and currently, trading still under 1,200. The Dow popped back up above 20,000. The futures went to like 20,060 something. So right now, as it stands, the interesting part that I'm going to show you is that, excuse me, there's something interesting in the weekly chart, which makes me think that what we're seeing in the gold with the pullback is just a temporary situation, and we should be seeing a pop here within a day or two. I don't know really how the Chinese New Year is going to come into play with gold, being that the Chinese trading exchanges will be closed, so will the banks. So I'm not really sure if that's going to have any major effect or not. There's a school of thought that suggests that it will be a negative effect because they won't be there to help prop the market up per se. But there's another school of thought that says it could possibly rally. So that's the thing about, fundamentals. Fundamentals have been divorced from technicals for a long time. And even though you know that a negative event may happen or a positive event, it doesn't mean that we know necessarily how the markets are going to respond to said event. So the jury's still out. All I know is what the charts are suggesting and what we see. All right, I'm rebooting everything back up, and when I do, I'll be able to turn the screen share portion back on. That's what I was waiting for. Just waiting for everything to boot back up again. And then we will go there. You'll be able to see the screen and all that good stuff. So anyway, as it stands, that's what I am thinking, only because of what I've been seeing on the chart, and you cannot discount bullish formations on a chart. No matter how minute, minuscule, whatever, you have to trade what you see and anticipate and take precautionary measures for what you don't see or what you fail to anticipate, if that makes any sense. So that's pretty much what I like to do. I like to be prepared for what I don't know. Again, the punches that you don't see coming always hurt the worst. So, all right. So, getting into the pre-market, the Dow futures last night dropped to 19,991, but rallied to 20,069. It's up. The Dow's at 14 right now at 20,017. The NASDAQ 100 is at 51.54.5, up 8 points. We hit a high of 51.68.5 and a low of 51.44.25. The emini S&P 500 is flat, unchanged at 22.94. The high was 22.99.5. The low 22.91 3/4. Russell is down 40 ticks right now at 1382. The high was 1387.10. The low 1380.5. The Nikkei up 310 at 19,560. The high was 19,590. The low 19,245. All right, crude oil. Crude oil is up 32.5 cents at $53.07.5. The high was $53.25. The low $52.80. U.S. dollar index is being well defended, up 40 ticks at par 42. The high was par 51. The low 99.76.5. The euro down 45, we'll make it 46 pips at 107.16. The high was 107.85, the low 107.07. The pound is down 53 pips at 125.86. The high was 126.86 and the low 125.70. The Aussie down 19 pips at 75.32. The high was 75.75, the low 75.20. Gold currently is down $9.30 at 1188.50. The high was 1202.30, the low 1185 even. Silver down 15.5 cents at $16.83. The high was $17.05, the low $16.68. Now, technically speaking, a stronger dollar should cause commodity prices to fall. However, what we saw yesterday was the dollar moving with commodities. So commodity prices were down and so was the dollar. They were moving lockstep together, which technically speaking, according to market theory, is not supposed to happen. Strong dollar, weak commodities. Weak dollar, strong commodities. That's how it's supposed to go. Stock market up, bond prices down. Bond prices up, stock market down. We have not seen those relationships in quite some time. We've seen the opposite, a breakdown of market correlations, which is not healthy for markets. But that is what happens when government gets involved with things. The normalcies of things break down, and you no longer have what you're supposed to have because of over manipulation, over regulation. And that is a problem for any market. So going forward, what we're hoping for is for there to be some type of alignment, let the markets come into alignment and do what it is they're going to do. Hopefully we will see that in the coming days with this Trump presidency. Maybe we will see government finally begin to get out of the way of markets and allow markets to do what markets do. So that's what I'm hoping for. I'm hoping that we can definitely see some of that. That would be very healthy for markets going forward, and it would bring back a lot of the retail people back into the market. They're waiting for a reason to get into the market. But right now, I mean, can you blame them? You can't, because the government has interfered so much and caused the markets to be so crazy that, I mean, you can't trust it. So if I were them, I wouldn't trust it either. I'd be scared to death too. So I think it's the government's job, since they created this mess, it's their job to come in here and bring back people's trust in the system. Because right now that trust is missing in the system. And if you can't trust the system, which is the economic engine that drives growth and innovation and all that good jazz, then what do you have? You have nothing. So over these past, several years, the government has done everything that it can to destroy the markets. And that is not good. So they need to fix it. And I think the only way to fix it is for them to get out of the way. And when the government gets out of the way, things can take their natural course and healing can begin. All right. Excuse me. I'm off of my soapbox now. So let me come back over here and add the screen for you. You guys should be able to see now. All right. Okay, let's get into now the meat and the reason why we're here, and that is for the pulse waves. We want to thank our main man DV in the trading room. Big round of applause. Thank you for repairing the sheet and doing what you do. It is awesome. Color codedness has been added so that you can see the alerts now through color code. So when you see the stop run in effect, you'll know when the stop run, i.e. the momentum price trigger, is showing a long entry, you will be able to see that now. And this is not going to work. Oh, I wish I could show you that. I'm going to have to do it on the other computer. So if need be, we'll do it on another computer. But just pull out your sheets. You should have your sheet now. Go to the In Play tab. We'll start there. We'll look at the In Play tab. All right. If you'll notice, the very first one, First Majestic, ticker symbol AG. Notice how the entry column is red today. The entry price is red. All right. And that's telling you that the market is favoring the short side today. Okay. And you should be prepared to sell that today. All right. Because you have a stop run pointing in that direction. All right. That's where your momentum price trigger is. So if the momentum price trigger is favoring the long side of the market, it will be green, like in the security right below that, which is AGG. Notice how your entry price is green. So the color code now is going to help guide you, because I know there were some questions even with the webinar yesterday about when the momentum price trigger, i.e. the stop runner is showing, you know, buy or sell, favoring buy or sell. How can you get it in your mind? So this is going to help you do that now. So regardless of your positive momentum and your trend, negative momentum, downtrend, whatever, this is going to help you to sum all that up. Okay. So this should really, really help you guys going forward. And it should be a straightforward thing. It shouldn't be that technical, that difficult to understand. All right. So moving on here, let's get into some alerts for the day. All right, we have how many here? We only have a handful of rally alerts for the day. Have a rally alert in the Nikkei, which I'm not surprised because the Nikkei has been the weakest of the stock indexes between the Nikkei and the Russell. We have a rally alert in the DSLV. And so that's saying that silver could possibly be a little bit stronger than gold today. We have a rally alert in Dust, which is the inverse ETF. We have a rally alert in the EUO, the inverse Euro. Have a rally alert in Gold Mining USA. Have a rally alert in JDST. A rally alert in the Yen. A rally alert in the biotech space. And in the ultra short silver, which is interesting. So let's see how these possibly play out. We only have one 411 alert, and that's in the live cattle futures. All right. All right, so let's go up now and take a look at our crash alerts. We have a plethora of those. We have a crash alert today in the gold futures, and we have a crash alert in the Australian dollar. We have it in NAC, NAK, Netflix. We have it in the Aussie ETF. We have it in Nugget. We have it in SIL, AG, AGQ, GDXJ. So that could put some pressure on the JNUG. JNUG has a crash alert as well. And we have it in USLV. We have it in, let's see, crude oil. And we have it in the uranium space, tickers UEC and URA and URRE and Quad U. They all have crash alerts. Now, let's take a moment here and throw in what I was telling you at the beginning of this. We have a caveat here on these crash alerts and these rally alerts, and that is the Kumo cloud of death. A lot of these you're seeing that up-down trend. You're seeing that they're in the Kumo cloud of death. Remember what I've always told you about the Kumo cloud of death. The Kumo cloud of death, typically you'll see prices oscillate constantly while they're in the Kumo cloud. Up one day, down the next day, up day, one day. So they're going to trade off like that. The good news, however, is what I was telling you about that I saw in the JNUG. So walk over here to the chart. We'll pull up the weekly here on the JNUG. And I want you to see this right here? See how we're inside of the prior week's bar? So it's like if this is a daily bar, you would call it an inside day, basically, or an inside low. We're staying inside the low. I think we bested the high. The high was 934. We got to 964. Yeah, we bested the high before pulling back, but we're staying within the low. We haven't taken out the low. If we take out the low, then we'll have a reversal, and then the market could get back down here, down to the $3 handle if they don't do another reverse split. So technically the JNUG and the GDXJ will be in trouble. But because we are staying inside the low and we're riding this momentum trend line support, this should give support. So if we don't do it between today and tomorrow, next week sometime, we should be able to best the initial resistance of 991 and close above the $10 handle, which will take us to the 1310, the trend line resistance. So I'm actually seeing $10 being the new floor for the JNUG moving forward. Okay, and this is on the weekly. All right, so this is what I wanted to point out to you. That's why I think any downside we see today should be short-lived, and we should not take out this low. So if you're long, you want to be out of it if it takes out this low. All right, this is where it is. This is, and I posted to you where the intraday support was, and that's where I moved my stops too, as a matter of fact. All right, so I'm in there with you. All right, taking a look, I want to show you the same type of a scenario in the SDAO as well. All right, on the SDAO, you can see it's kind of flat. It doesn't move as much. So we should be able to hold that one longer, even longer than the JNUG per se, even in light of the Dow at the 20,000 range. I think the stock market is getting ready to have a small little correction here. Nothing really too big, but I think it's going to pull back and retreat from these lofty highs. I don't think we're going to necessarily best 2100 just yet. I think it wants to play around here, consolidate, and pull back some. And one of the reasons why I believe so is because the Russell has not taken out its 1400 psychological resistance. Neither has the emini S&P closed above 2300. If the S&P closes above 2300 and the Russell can close above 1400, then I will reconsider what I just said. But no, right now it's looking like this is exactly the scenario that is going to play out. So going forward, that is what I think we can look forward to in the short term. And I'm talking between, today and tomorrow. I'm not talking about anything long term. This is between today and tomorrow, irrespective of the Chinese New Year. Just taking a look at this pure price action at this point. All right, let's see, moving right along here, going up to hold on one second. I will tell you right now. As far as the intraday stops, all right, so moving along, you're going to see that there are a lot of Kumo cloud situations. Look at this. Pretty much everything on this sheet basically is in the Kumo cloud right now. And that is to be, that's to be expected because there's so many markets that are consolidating right now. All right. So many markets consolidating. All right. So that's pretty much it. We're gonna watch and see what happens today. Today is Thursday. I didn't even get a chance to look at reports. Let me see. Do we have jobless claims that came out already? I haven't the foggiest idea. All I know is right now the markets are doing what they're doing, and we're going to get ready to do what we do with them. It should be noted, too, that the Russell is only up, and I did say this, the Russell is only up 80 ticks, and the S&P 500 only up a point. NASDAQ's only up 9 points, and the Dow is only up 23 points. That's nothing. All right, so I think this is a continuation top on the short term. That's just the way I'm seeing it. I could be wrong, but who knows? We'll have to wait and see. So with that said, I'll see the rest of you in the trading room. That will end this morning's talk. And I have to step away for a bit, but I'll be back a little bit later on this morning. And the rest of you, I will see at the end of day report on YouTube. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.